All right, it's the 13th of June. It's a Friday. We've got about 25 minutes to the NY Open. Go to the charts. Okay. All right. Okay. It's the end of the week, and let's see if we can predict the weekly candle close, where the weekly candle is going to close, where it could possibly close. But again, this depends entirely on volume. If there is volume today, if there isn't volume today, then we're just going to range, right? All right. So let's go up a time frame to the weekly. Now, let's get rid of this gray area for now. Okay, so the weekly candle is very bullish. It's moved 1,500 pips. Unlikely it's going to trace back 1,500 pips and flip bearish. That's out of the question. So is it going to close with a larger wick to fill next week since we're pushing up? Or is it going to close with a smaller wick to fill? That's the question. A larger wick means price could close around 3,400 or below. A smaller wick means price could close around 3430, right? That is the play that we can predict or look forward to today, right? So if it's a smaller wick, then we're very likely going to pull back, grab liquidity, and continue to push up. If it's a bigger wick to fill, then we're going to push up, grab liquidity, and continue to push down, right? And then in both scenarios, the daily candle is very likely to close bullish above these levels here, above 3383, right? Above these levels, the daily candle is, because this daily candle has closed above daily resistance, it's very likely that this one is also going to close above that level. So it depends, is it going to leave a bigger wick or a smaller wick, right? That's the only play. So if price is to create a bigger wick, then we can expect a liquidity grab and price to continue down. If price is to push up, then we can expect a liquidity grab around here, maybe even further down here, and then begin to push up, right? Now that will happen only if there is volume. If there is no volume, price will just continue to range, move sideways, right? Very similar to what happened yesterday in the NY session. Let's go to the trading chart. Now, what's happening right here is very much like what happened right here, right? We just went sideways. Price came here to the liquidity candle and just pushed up, pushed down, pushed up, pushed down, just went sideways. Right? Just if you draw a center line there, just price stayed, that's probably the median, and price stayed either above it or below it, right? So there was no volume at all yesterday. And if you look at the 1 hour time frame, that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours, no volume, right? Now we have a very similar situation today. 1, 2, 3, 4, 5, 6, 7, 8 hours, no volume. Price is just moving sideways, right? So we're going to draw our zones, and then we just wait for a trade if there is a setup. If price creates some sort of structure, we can look to take buys or sells depending where price is. Okay, we could drop down. Very likely we've formed resistance. form support as well. Yeah, it's hard to say. We're just ranging in a very small range, 90 pip range. Price is just pushing up and down. This 90 pip range. Okay, let's get rid of all of these. Price is in this liquidity candle. It spent a lot of time here. Okay, let's take a look at the 4 hour. So the reason for this massive push up in the Asian session, was it Asian or was it, yeah, Asian. 625 pip push up is because of there are some conflict right now between Israel and Iran, and that's the reason whenever there is uncertainty in the market, gold pushes up, and that's exactly what happened, right? 620 pip push up. But after that, London session, no volume. Pre-NY, no volume yet. Just nothing. Just moving sideways. No volume. Okay, let's start. That's a rally, 2 basin candles, and a rally. All right, put the numbers on that. 198, 789. Okay. Supply, it's this supply. There is nothing here. Let's take a look at the 1 hour time frame for supply because price has come deep in here. So there is a rally here and a drop here. There is supply up here. So what I'm going to do is I'm going to extend this 4 hour supply zone. I'm going to bring it up here, right, to this area right here. Let's take a look at the 30-minute. There's nothing on the 30-minute either. There's no zone there. Maybe on the 15-minute there might be something. I don't like looking at the 15-minute, but yeah, there is a zone there. All right, so we're going to bring it down to that. Yeah, let's bring it down to this. 784. And now price is inside this liquidity candle. Let's leave that for now. Right, let's look at the 30-minute time frame. This price has crossed this area. Let's also look at this area. There is a zone here, a drop, 2 basin candles, and a drop. Clear zone on the 1 hour. Okay, price is coming back there, and there is a clear zone because of the weekly SR level. There's a drop, a base, and a drop. The 30-minute is not that clear, but on the 1 hour it's very clear. Let's put the numbers on that. 032. I'm going to bring it to this close. 433. Okay, that's better, right? And then this is also 1 hour supply. Look at the 30-minute. We haven't taken out anything here. There is a zone here that has come up to this, but it's let's mark it because price has come off a psychological round number, has pushed up from psychological round number, right? So that's why there's a zone there. The zone would have been, I'd like to see the zone somewhere here, but it's above the psychological round number. That's okay. So that's where price is trapped in between. It's trapped in between this range. That's the bottom of the range and that's the top of the range. 653, 370. Okay, that's 30-minute. And this is a 4-hour demand. It's 4-hour and that's a 30-minute. Okay, and then here we're going to redraw this now. Get rid of all of that. We have a rally, 3 basin candles and a rally. That's a large zone, 359, 360 pip zone. Yeah, let's keep it on the 4. That's fine. 450, 863. Let's get rid of this as well. Okay, so we have 2 new demand zones, a 30-minute zone, a 4-hour demand zone, and we have a readjusted 4-hour demand zone, right? And then for supply, we have 1-hour supply, and that's a readjusted 1-hour supply. Okay, let's take a look at these. Let's take a look at these zones individually. Okay, let's start with supply. See if this is a high liquidity zone. Let's go to the 30-minute. Has it taken out anything to the left? No, it hasn't. This is not a high liquidity zone, right? Has this taken out anything to the left? It's, yeah, we have a zone there. We have the high there. There's a zone there. This zone here has pushed past and broken that high there. Okay, zone below. Yeah, that too has taken out. Yeah, this push up has taken out this zone here, rally, base, and a drop here, right? This zone has taken out, this push up from here has taken out that high. Okay, and this is yesterday's zone. Yeah, it's good enough. And Let's look further up. This is no longer a high liquidity zone. Prices come deep into it. Yeah, that was the original origin of the zone. This was the source of supply. That was a 319 pip, 315 pip zone. Prices come deep into it. Yeah, we've come very much into it. So that's no longer high liquidity zone. Then we have this further up. We would extend that to the right. Okay. Now, let's take a look at this liquidity candle. This liquidity candle is based off this 15-minute candle right here. This big candle right here. Just a second. Right? This massive candle right here. But now, we've created a zone here. Yeah, we could be pushing down. We could be pushing down from this liquidity candle. We could be pushing down. Yeah. So what I'm going to do is, in fact, just keep it there. And let's take a look at this area for another liquidity candle. There is this candle, which is 199 pips. Yeah, start with that. 30-minute, 15-minute. Seven 100. Yeah, this 5-minute candle, perfect. This one right here, 850834. Yeah, could push down. It could push down. And then further up, there is this large candle right here. 15-minute time frame. Yeah, keep it on the 15. 456112. Yeah. Yeah, we haven't broken the zone yet. Haven't broken it yet, but we have two new liquidity candles here now, right? Okay, let's take a look at this one, this zone right here. On the 1 hour, there is nothing. On the 30-minute, there is nothing. On the 15-minute, you're very, very likely to push down. Very likely to push down. Let's see. Hard to say. We're ranging. It's tough. Tough. There is no volume. We can't buy because there's a liquidity candle here, and there is a weekly SR level right here. So you can't buy in supply. And to sell, there is a demand zone here. But we have come deep into it. So we could push past. We could come below this low. That's possible. We could come. Price could drop below this low. This candle has no bottom wick. We could come to 3,400. That's possible. Okay, let's take a look at this area. On the 30-minute, there was nothing. On the 15-minute, there is this candle, 144 pips. So it's 135, 202. Let's take a look at the 5-minute. One 117, 109, 115, 99, 125. Yeah, this one right here, this candle, 248016, 248. Yeah, that's the candle. And then further, let's just save this. Further down here, 200 pips, 37, 184. Yeah, that 15-minute candle right there. 885072. Okay, I think that's good enough. We don't need to look at this one right now. Prices were ranging. I'm going to drop 500 or 600 pips. Yeah. Yeah, no. This daily candle is not going to flip bearish. There's no volume to do that. Okay, so here's what we got. We got a supply zone here. We got a demand zone right here. We got a high liquidity candle here and a high liquidity candle here. We've got a very tight range that price is in, about 90 pips. About 90 pips. Form support, price is above the EMAs. We form support. We could push up. Can't really take buys here because there is a zone right here. If price pushes down further, We can wait for 30-minute support to form and take a trade up, or if price breaks this liquidity candle high, reacts somewhere here, pushes down, then we can look for support to form again for 30-minute support and then take a trade up, right? We have NY session is about to open. This has formed in pre-NY. Yeah, could have a pullback and price could continue higher. If you break this liquidity candle, we have 3430 to contend with. So price has to have a lot of volume to be able to break the liquidity candle, go past 3430 into this candle to trade into this candle right here. And from what we've seen over the last several weeks, there's no volume in NY session. And there's no news today. So we just have to wait. But Asian session, brilliant trades. Yeah. 30-minute support. 15-minute support. Just broke the high and continued, no pullback. Okay, let's take a look at what price has done in the Asian and London sessions. Let's go to the 50-minute time frame. That's the market open here. So the market opened at 3385.6. We have this. It's not the swing low. Yeah, this one right here. Yeah, it's a London high. If you reject this, we could reject 3430 and push down. Very possible. All depends if there is volume. Or to see. We'll wait here and see if there is a setup. But that's a counter trend trade. But either way, that's the bottom of the range and that's the top of the range. So even if you get a sell here, might not run long. 80, 90 pips. Yeah, no bottom wick, proper bottom wick. Could break this low, current low, could break here, come down. Very possible. Okay, let's put the numbers on this. 370. 794. 850. Okay. Right. Let's see what happened. This is where the market opened. Yesterday we were just ranging. The market moved sideways all through NY, and just a second. Mm. Okay. Okay. So the market opened here. We were ranging. We tapped the EMAs. This was driven by news, by what happened with Israel and Iran, and price pushed straight up. On the way up, created a liquidity candle, dipped back, created the Asian low, continued higher, got to 3430, ranged a bit, closed at it, closed below it, closed at it again, broke the high, continued high, went to the liquidity candle on the left, right? This strip here that was much larger, went deeper into that. We rejected, we formed the Asian high, formed a liquidity candle, pushed back to 3430, range there, closed below, closed at it, closed below, tapped it again, tapped 3430 again, pushed range for a while, formed the London high, pushed back down to the EMAs and the liquidity candle. And then ever since we've just been ranging between the two, right? We've just been ranging. Yeah. So let's see. Yeah, I'm not keen on taking a trade here in this zone. We've come here quite a few times. Once, push down twice, third time, could break and push up. For sells, I would like to take sells from up here, if at all. If at all, I'm taking sells 3450 or here, or even this liquidity candle here, right? But not here. This is just an ugly range. You got to wait for price to either break below, start to push down, and then we pull back up and we create some sort of structure support to push back up, or sells from up here, or buys from down here. Not here. No sells here. I'm not gonna take any sells. Even if there's setup, I'm not gonna take any sells here. It's just not worth it. Yeah, it's not worth it. We've just been ranging there for way too long, far too long. So even if you form 30-minute resistance, I'm not taking any sells here. The EMA is just there. There's a zone, M30 demand zone here, M30 demand zone right here. Yeah. Sells from above here, above this area, above 3430, yeah, maybe, could be. If you form 30-minute resistance and a clear 30-minute tradable back candle closes, yes, we could take sells from up here, but not here. And buys from, yeah, further down here. If you break the high, pull back, create support, then yes. But if you don't break this liquidity candle high, continue to pull back, then maybe from around 3,400, or this liquidity candle here to look for buys to go up. Right now in this range, I'm not doing anything. This is the range. We're, we're pushing down from it again. Yeah, 90 to 95 pip range. In that range, I'm not doing anything. I'm definitely not selling in this range. Bottom of the range, you could buy. You could buy. You could buy. Because we're above the EMAs, could buy. But I would prefer buys further down. Maybe at the second EMA, close to 3,400. If you reject the London high, we are coming down here anyway. So those are better buys. But I'm not going to take sells here. Very straightforward price action in terms of what I'm planning to do. Price action is ugly. Yeah, so when I say no news today, what I mean by is the the news data that comes in, right? There are six um, main news events that affect gold during the NY, uh, not six, four in fact, during NY open hours. So that's the first 2 to 3 hours of the NY open, right? So that is NFP, CPI, PPI, and retail sales. These four news events, right? These four are the major four news events that affect gold during the first 2 to 3 hours of the NY open every month, right? These four news events that I mentioned: NFP, CPI, PPI, retail sales. Apart from that, there are two others, but that is in the second half of the NY session. That also happens once a month. That is the interest rate decision, and 30 minutes after that is the uh, FOMC meeting minutes, right? Those two news events. They're two separate news events. They happen 30 minutes apart. They happen on the same day, but they happen 30 minutes apart, and they happen in the second half of the NY session, right? Those are the main six data events with regard to data that move price in the NY session. Apart from that, there are geopolitical events like a pandemic, a war. Could be it could be Russia Ukraine, it could be Israel Iran, it could be the coronavirus, whatever, right? Anything to do, anything that causes uncertainty in the market, anything that causes uncertainty in the market will overall drive the price of gold up, right? Will push the price of gold high, and that's exactly what we saw today, right? And to add to that, also the trade war. Anything to do with the trade war. If there is any uncertainty with the deal between the U.S. and China, between U.S. and Europe, right? These are the two main trading partners. Anything to do with these two, I mean, states, either Europe or China, right? Anything to any uncertainty in the trade talks will drive the price of gold up. Any any sort of a deal that is being that has been signed between the US and China or US and Europe will uh, is seen as strength to the dollar and will push gold prices down, right? And the same goes for war. If there is a de-escalation of the war, if there is a de-escalation between Iran and Israel or Ukraine Russia, then you see gold prices push down, right? So that's geopolitical events. That is not data related events, right? So data related events, I've named the six. Four of them happen within the NY Open hours. That's the first 2 hours of the NY Open. The other two are in the second half of the NY Open. And they happen once a month. All these six news events happen once a month. So yes, uh, I, I, I hope that answer is clear. So yes, price is driven by uncertainty, any kind of uncertainty, any kind of global uncertainty. Gold prices will push up, and that's exactly what you saw in the Asian session, right? The prices pushed up when the news came out that Israel has bombed Iran's nuclear sites, some of their nuclear sites, and that's the cause for this 620 pip move up, right? But after that, you can see prices just ranging. So that's the one news event that drove price up, and now today there is no news today, right? There is some news, I think at around 10 a.m. EST, which is um, which is not that really important. It's around 10 a.m. EST. It's this prelim consumer sentiment, not important. These are not important, right? So the six news events that I mentioned, the data driven events, those are the ones you need to watch out for, right? Now, apart from that, there are lots of global uncertainties happening in the market, which you can't predict for. But the news events, you can plan for that, right? Maybe not trade the news event. That's a little dangerous because the price will always push up or down to grab liquidity, go in the opposite direction. But um, we know in advance when those news events are happening. We know that in advance, right? On Forex Factory, you will see it. Like here, we had CPI and we had PPI, right? And next week we have retail sales. So that's one of the six that I mentioned. We have retail sales. Then we have the federal funds rate, which is the interest rate decision, and then 30 minutes after that is the FOMC press conference, right? So those are the main six that I mentioned. These are part of that main six, right? Apart from that, always there are geopolitical events that can push gold up or down. If you trade at the Asian session, there was no, I mean, if you're a breakout trader, yes, you could have, you know, taken a breakout. If 30 minute support form and 30 minute support did form here, you can look to take a breakout. If you're a breakout trader, I like to take a trade a pullback. There was no real pullback. Price just, the news came out and gold just flew, right? And there is nothing, it's very difficult to trade uh, a geopolitical news event, right? Something like a war. I remember when 2022 was it? Yeah, 2022 when Russia uh, started the attack uh, into Ukraine. price just pushed up in the Asian, I think the Asian session or the London, just I think the Frankfurt session, just spiked up, and there's nothing you can do. There is no pullback, there is no setup, there is no market structure, there is no technical analysis, there is none of that. You can't account for that. Price just randomly pushes up or down, right? So those kind of events, we don't know in advance, whether it's going to happen, when it's going to happen. But data-driven events, we know in advance um, the date and the time of the event, right? So we can look for market structure. We can have some sort of a plan towards a data-driven news event. But to a pandemic or a tariff war or you know an occupation or a war, you can't plan for that. You don't know when it's going to happen. And of late, over the last 2 months, uh, Trump, releases something on Truth Social at the end of towards at U.S. Eastern Standard Time, probably in the evening, late evening, right? So the effect of that news event kicks in at the Asian session. And that is why over the last 5-6 weeks, we've seen a lot of clean volume in the Asian session. And in the NY session, nothing. Look at that, just a sideway market. And that's very possible today as well, just sideway market. Because he'll put something on Truth Social, you know, he'll say something on Truth Social towards the end of the US trading hours, and then that effect takes I mean that message or that is takes effect to the market during the Asian session, and that is why you have big moves in the Asian session, right? But that's not the reason for this big move is because of what happened between Israel and Iran. But there are a lot of other instances when he says something to do with the tariffs, or something to do with Ukraine, Russia, towards the end of the U.S. workday, right? He posts something to Truth Social, and then that effect is seen in the Asian session because that's the closest, session next to, the next trading session is the Asian session. Yeah. So right now, very similar to yesterday, we're stuck here, right? This is the that's the top of the range, and this is the bottom of the range. So I'm not, even if you get 30-minute resistance here, I'm not going to take a sell. Price could drop. It could form 30-minute resistance. There is no bottom wick. Price could easily drop all the way down here. It could drop 200 pips. But I'm not going to take that chance because A, we are ranging. There might not be volume. That is the first reason. Second, we have a demand zone just here that has pushed price up a couple of times already. It pushed it once here, then it pushed it twice here. So it could push, if it comes down, it could happen a third time. So that's the second reason, right? And third reason is price is above the EMA. So it's a counter trend trade. So those are the three reasons, right? The price is ranging. There is a demand zone right here, and then it's a counter trend trade, right? For those reasons, I'm not willing to take a sell, even if there is 30-minute resistance form and a tradable 30-minute back candle closes. I'm not willing to take a sell here. Further up here, yeah, maybe. Um, but to me, buys are better when price is above the EMAs. It's better to always look for a buy setup, right? You might just have to wait longer. You might have to wait till, um, probably the second half of NYC towards the London close. You might have to wait for that, but that'll be a better trade, right? You could possibly be on the right side of the market just by waiting, for a while. Because if we are to close, we spoke about two scenarios, right? A big daily wick, for price to push down, or a smaller daily wick, which means the same will apply for the weekly candle as well. So a larger weekly wick for the next candle to fill, uh, or a smaller weekly wick for the next candle to fill, right? So what would that look like on the daily? On the daily, it could be you could have a small body candle with a big wick, or you can have a small wick with a larger body, somewhere like how the candle is right now, right? So candle could close down here, very possible. It can close around 3405, or we can close uh, very close to 3430, right? 3405 or 340. That's a $25 move. It's about 250 pip move range that price can, price has a space to trade in, right? So if that is the case, I would just wait, just patiently wait, and then once I see a clean break to one of the two sides, then I'll have a better idea of what to do. Yeah, 30-minute candle is trying to close bullish, but still inside the range. Still inside this range. We might close just above this, but the next one can close above, close back below. Price has to close above 3430 for us to continue to push higher. It needs to close above. We could push back up, but we have a rejection. You got to remember this is a rejection, clear rejection. So price could come up, and that's what I'd like to see. 30-minute resistance created somewhere up here to take a trade to come down. But again, that's a counter trend trade, so you'll have to be very conservative with your TP levels. We got 3430 right here. So even if you do get a trade, might not run much. 30-minute candle closed above, but no top wick as usual. So the next one can come back down, all the way down again. Yeah, that's the range. That's the range. We've been stuck in this range since Asian. Yeah, since the second half of Asian. We closed above, stayed above, pushed, then we closed below, and then we just stayed inside it. Pushed down, pushed back up, pushed back down, pushed up. We closed at it. We've closed at it, but no top wick, so the next one could close back below it. If 30-minute resistance form here, you can take a trade technically, that's possible. Because if this is a range, that's the top of the range, and price could come to the bottom of the range. That's very possible. You can take a trade. But you got to be careful. You have to wait for 30-minute resistance to form, right? And then risk what you're willing to lose, and then take a trade to come down to the EMA. About 100 pip drop. Maybe less, maybe 80 pips. It depends on where you get entry. But you have to wait. You have to wait for 30-minute resistance to form. This is the top of the range. We'll continue to push up, trying to push back up. Tap the London high. We've tapped 3430. We're currently above the range that price was stuck in. Let's see if we can push back up, react to this candle, form 30-minute resistance, and take a trade to come down. That's a better trade, not to take sells here. That's better. Further up at the extreme. We've gone past the liquidity candle, right? So we can get rid of this. Gone past the liquidity candle. Pushing up. Yeah, let's see what happens. There's smart. It's very slow. You could no top wick, so we could come back. We could reject, close back below, and then push, continue to push down, and just stay in this range again. Very possible. I'd like to see price push up. Like to see price push up, and then maybe form 30-minute resistance further up inside this candle. This is a clear bearish engulfing candle created in the Asian session. I'd like to see price come into it, possibly come at least here, another 50 pips, push up another 50 pips to that zone there, and then maybe form resistance. But I still prefer buys. I still prefer buys. Price to pull back, create some sort of support. Yeah, some sort of support. 30-minute support is better because we're ranging. Comes down here, creates 30-minute support, then pushes up. That's better. I prefer buys today. If you're trading the London session, that was a trade here. 30-minute resistance created. This is just before Frankfurt. Yeah, this is Frankfurt open. This is London open. Yeah, this is Frankfurt open. 30 minutes, 30-minute resistance. Price came back up again, stayed below this high, pushed straight down to the liquidity candle. So 150 pip move down. I can get rid of this as well. Keep the chart cleaner. Yeah, it could happen, but you got to also be prepared if it doesn't happen, right? And then if it doesn't happen, you shouldn't uh, feel pressured to take a trade today because it's a Friday. I prefer buys too, but I would rather have uh, no trade than have a losing than end the week on a losing trade, right? I would rather have no trade with no clean setup than to take a trade, just feel compelled to take a trade because I need to take a trade in the NY session, and that trade turns out to go in drawdown, and then I close the trade, and then it goes back in profit, and then I try to open the trade again, and again goes in drawdown, and then I close the trade again. I I would I would rather avoid that, right? That causes stress, that causes losses. There is no good that comes out of that. So it's always better. Yes, I would love to take buys, but I want to see my setup, right? I want to see my setup the way I visualize it, right? If price comes here, forms 30-minute resistance, I would take a trade, but with very low risk. I'll take a trade with low risk because it's a counter trend trade. Price is very bullish. It was very bullish during the Asian session, but because price, this is a high liquidity candle and we are inside the zone, we could come here and we could have a small drop, right? It might be a 50, 60, 70 pip drop, but that's okay, right? I will take that trade, but with very low risk because it's a counter trend trade. The better trade, like as I said, are the buys, but may not happen. If price just pushes up and there is no volume, then we could just push up, create maybe some sort of structure here, push down, and just range, just continue to range. And the weekly candle closes with a small wick, or the daily candle closes with a small wick. That's possible too. Those are the two scenarios that we spoke about right at the beginning, right? The weekly candle could close with a small wick, the way it is now, right? Or just even a little larger than this, or it could close with a very big wick, right? For a very big wick, price would need to push down, right? And for and that's sort of very big. And for price to close with a small wick, there could be two scenarios. Price could just push up and just range, just push down, then range in this area, or price could push further down, grab liquidity, and go all the way back up again. Now, for the second scenario to happen, there has to be a lot of volume in the market for price to push all the way up, push down 250 pips, push back up another 250 pips. That's a high volume trading day for that to happen, right? And from what we've seen in the NY session, we've not seen high volume trading sessions in the NY session, right? That's the reality of it. We've not seen 250, 350, 300, 350 pip moves up and down in the NY session. We haven't seen that, at least in the first 2 hours or 2.5 hours of the NY Open. We haven't seen that. Later on, maybe around London close. That's why I said your trade might come in later on, like now. See what's happening on the 15-minute. We are beginning to push back down, right? The 30-minute candle closed with no top wick. The 15-minute candle pushed past it, and now the next 15-minute candle is trying to come back down and close below, right? The candle has another 10 minutes to close. That could happen. We could come back, close back below. And then if we come back and close back below, what's happening? We're coming back into the range, right? Into this range. The price has spent, what, 10 hours in this range now? 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. 9 hours. This is the ninth hour. And we have less than 10 minutes for the candle to close. And the 1 hour candle has no bottom wick either. So the 50-minute candle could close back in, or the next 50-minute candle, the 50-minute candle could close back in under 3430, and we could push down again because there is no bottom wick here. That's very possible. So uh, you always got to have, you always got to be prepared for, um, for one of three scenarios. You take a trade according to your setup, and it's a win, great. That's the best possible scenario. You take a trade according to your setup, and price goes in drawdown, and you manage risk, and you lose less than what you plan to lose. That's an excellent option as well. And the third scenario is there is no trade as per your setup, right? There is no. So for me, my setup is 30-minute support, 30-minute resistance, 30-minute tradable, bull candle close, or a 30-minute tradable back candle close from a liquidity level. That's my setup. If that happens, I have a trade. If that doesn't happen, I don't have a trade. And at least 2-3 times the week, I do have a trade, right? But unfortunately, the first 2.5 hours of the NY Open has been such as that there has been no volume for a setup like that. Even if the setup forms, there is no volume for price to go to my TP. There's just no volume. But whenever I've traded the London or Asian sessions over the last couple of weeks, I've traded a few of them. Not every day, but maybe like I've traded like twice a week. I trade either the Asian or London. I've had volume. I've had winning trades because that's when the volume is. The volume shifted, right? And the reason for the shift is because it could be many reasons, many reasons, right? There is no one reason. So it's hard to say, okay, this is the exact reason. It's because Trump is posting, he's saying something on Truth Social at the end of the U.S. Workday. So hence the next trading session is the Asian Open. That's why that could be one of the reasons. But there could be many other reasons why volume has moved to the Asian session, right? There could be many more reasons that we're not aware of. All what we can see is market structure, right? Something that has worked over and over again. We bet on that to work again. And if it does work, we have a winning trade. If that pattern or that play or that setup or that trade plan, whatever you want to call it, if it doesn't work out, then what are you going to do? Are you going to take a full loss? Are you going to let price hit your full stop loss, or are you going to manage risk and lose less? And if you just do that, if you just manage risk, even on a very simple, 1 RR system, you'll still be consistently profitable if you just manage risk, right? So if you're risking 2% and if you lose, let's say for example, 1% or 1.5%, right? You lost 1.5, you saved 0.5%. That's a win. You didn't lose your entire 2% that you risk, or whatever the percentage you risk, 1%, 2%, 3%. But if you lose less than that, and then you call it a day, you don't continue to try to trade, you you got to like what I do is one, maximum two trades. That's it in a session. If I don't exceed more than, very rarely, almost, I don't even remember when the last time I took like 3 4 trades in a session, or 3 4 setups in a session, right? Like one, two setups. That's it. The second setup doesn't work. The first setup doesn't work. Second setup doesn't work. That's it. I call it a day, and I look at the next session. So then I would come back if the New York session didn't work. I tried 2 setups. The New York session didn't work. I'll probably check the Asian session or very likely the London session the next day, right? And see if there's a trade. Okay, we're coming up. We're coming up. We're pushing up. Which is good. No bottom wick. 5 minute candle. We're coming up. I'm going to be here for maybe another 15 minutes. It's a Friday. I'm not looking to, not desperate to, I'm not desperate to take a trade today. Um, yeah, but the setups I've explained. 30-minute resistance forms, clear 30-minute tradable back candle closes. Yes, risk maybe half your usual risk and look to take a trade to come back down. But when you're coming down, you got to remember you got 3430 right here, right? So you got to be very conservative with your TP levels. You got to wait for 30-minute resistance to form, a tradable 30-minute back candle to close, and if there is space to take the trade to come to 3430, then you can take the trade. But you got to be very careful of 3430 because prices. You can see what has happened. We stayed below it, stayed above it, stayed below it, stayed above it. That's a key level, right? So you could come there and bounce back up again. Very possible. For buys, I'd like to see price to pull back, create some sort of support, 30-minute support, right? 30-minute support is better because price has been ranging for about 10 hours now, so 30-minute support is better. Wait for price to pull back, create 30-minute support, and then a trade to go up. That's the better trade. For me, that's the better trade. But we broke above this, we closed at it, the next candle broke the high and pushed up 107 pips. Yeah, price is coming up. We've tapped this candle right here, this rally based drop, but we could push right through. Very possible. Could push right through. We reacted to this rally based rally, this 30-minute zone. There's a liquidity candle there. Price tapped it once, tapped it second time, and pushed up. Unfortunately, this happened well before the NY Open. This happened an hour before. If this happened during the NY session, yeah, we could have taken this trade to push up because that's the bottom of the range. That's where the EMA is. That's where the liquidity candle is. That's where the demand zone is. So this trade made complete sense to take if it happened in the NY. But unfortunately, when we came to the market, when we came to the charts, the price was already here. It had already pushed up 60, about 60, 70 pips. 30-minute support, yeah, formed. We haven't taken out a low, just one. Price needs to come down, form 30-minute support to go up. Any questions, feel free to ask in the chat. I'll do my best to answer. Any questions with regard to whatever we've discussed, with the analysis or the setups? Pushing up, pushing up. Could head to 3,450. Keep in mind, the trade might get the trade later on, right? Just don't be hasty. Don't try to chase price here. We are inside a liquidity candle where we've tapped this 1 hour supply. So don't try to chase price. You try to buy here. You could get lucky and price could push up another 120 pips. You could get very unlucky and price could retrace back. 80, 90, 100 pips as well. So always look to trade at the extremes. Yeah, the 4-hour candle. I would wait for the 4-hour candle to close. 57 minutes. Yeah, it's always better. Just wait for the 4-hour candle to close. If the 4-hour candle closes bullish like this, then there's a zone that's formed here. A rally, base, rally, right? There's a zone here, and there'll be a liquidity candle here. Then you can look to see if price will come back there later on to push back up. Yeah. Or wait for, if you're looking for a sell, maybe wait for the last, wait for the next, for this 30-minute candle to close and the next one to open. Because usually the 4-hour candle pulls back, right, to leave a top wick for the next candle to fill. If it's to close bullish, then it'll leave a top. It'll pull back in the last 30 minutes for price to leave a top wick. That means this 30-minute candle will have to close bearish, right? Or the next 30-minute candle will have to close bearish. This one or the next one will have to close bearish and form resistance for price to push down. And then price will push down, create support, and then push back up to fill that 4-hour wick, right? That's the play. So if you visualize that, then just wait for that. Either this candle or the next candle will close bearish, leaving the 4-hour candle a wick, leaving a top wick on the 4-hour candle to be filled. But for that wick to be filled, price has to grab liquidity. And where will it grab liquidity? It will come down to a liquidity level, either to 3430 or to the EMAs to grab liquidity to push up. Now, if price closes bullish, then we have a zone here, right? There's a 4-hour zone here, I said. There's going to be a rally, a base, so there'll be a zone here. Let me just draw that, just temporary. This will be the zone, right? There'll be a rally, base, rally if the 4-hour candle closes bullish like this. And then in that zone, you'll find a liquidity candle, right? Just have to look for the largest bull candle. This one is, there's this candle here on the left, there's this one here. If we look at those two, this one here and this one here. Yeah, this one right here, right? That's a liquidity candle, 15-minute liquidity candle, okay? Yeah, 15-minute. If the 4-hour candle closes bullish, right? There's a lot of ifs. That's the reason I'm playing out the setup here on the stream is because I'm not going to be here for the next hour and a half. I'm going to end the stream in about 5-10 minutes. So if the 4-hour candles closes bullish, it could leave a wick for the next candle to fill, which means price will need to drop, grab liquidity, push back up to fill that wick. And where will it come to? It could come to this liquidity candle, this one right here, because that'll be a zone. You come to this candle, and then you look to take buys from here to push up, right? But you have to wait for the 4-hour candle to close for that. And if you're looking to take sells, then you could take sells to that liquidity candle, but first you have to wait for 30-minute resistance to form and a tradable 30-minute bear candle to close to take the sells to that liquidity candle or to 3430. That liquidity candle is a liquidity level, and 3430 is a weekly SR level, which is also a liquidity level, right? So price moves from liquidity to liquidity. Oh, you're most welcome. I'm glad I can be of help. If it helps your trading and if it makes your trading better, then that's great. And that's the reason I do these streams. Always also learn to manage risk. That's the most important thing in trading. You got to learn whatever system you trade. This system, the way I trade, or you trade a indicator or a bot or whatever. You got to have a system to manage risk, that you can follow a rule-based system that you can follow um, every day to manage risk, right? That's so important. A lot of traders, they look for the best possible entry system, the best way to trade, the best system, a system with a very high win rate. All of that's fine. But as a trader, you got to learn how to lose. You got to learn how to lose. If you don't know, if you don't learn, if you try to learn how to win before you learn how to lose, no system is going to work for you in the long run. You've got to learn how to lose. And what I mean by that is, it's very simple. If you are trading, if you risk 2% on a trade, then how can you, in a very logical way, based off, certain, it could be based off price action, it could be, based off anything, any other rule that you can use every day to reduce that risk, right? Like for example, I'll give you an example right now. Give you an example right now. I'll give you the London session example, right? Here's it. This is a lesson on risk management, right? And after this, I'll end the stream. 30-minute resistance formed in the Frankfurt session, okay? 30-minute resistance formed. This is a tradable back candle close, 30-minute resistance formed, right? Perfect. Okay, if you have a bull candle, then you have 30-minute resistance formed. This candle here, perfect, right? So this candle closed at 8 a.m. IC market server time, which is when this candle opened, right? So let's go to the 15-minute chart now. Right, this was the close of that 30-minute candle, right? So now we need to look for two previous M15 high breaks, the most two recent high breaks, right? So this candle broke this high, and this candle broke this high, right? So I draw the fib from here to here. Okay, this is the most recent low, and that's the highest high. So 171, and this low is 615. Okay, watch carefully, listen carefully. Right? So again, let me repeat. 30-minute resistance form. This is the Frankfurt Open. The price is pushing down. We have a base drop as well, right? After this candle formed. So we can see price moving down. It's broken below these lows, right? We broke this low, we broke this low, price is coming down, and we form 30-minute resistance. So go to the 50-minute time frame, and we'll draw the fib. Okay, now here's where you enter the trade. You enter at the optimal entry and at the sniper entry, right? These are the levels. Now, if you don't know how to draw the fib, please, I can share it. I've shared it many times on the streams. I can do so again. It's very simple. Just give me a second. I'll be back in a minute, and we'll continue this lesson. Okay, sorry about that. I just had to get the dough. Okay, so the fib that I draw is very easy. There is a 0 level, a 0.25 level, a 0.5 level, a 1, a 1.5, a 2, a 2.153, and a 4, right? And then these are, you can take a screenshot of this. These are the names that they will start from. I call these in, and if you put a percentage and dollar sign, you'll get the price value, right? And you can always take a screenshot of this and name it however you want to name it, right? Okay, so price comes here, you place entry, optimal sniper, and yeah. So we come here, we don't come to the optimal, right? We come just underneath and price drops, right? Okay, so let's say price came to and triggered this, right? This is where you would, place your stop loss just above that. So you have about a 27, 28, 27 pip range. Now, this range from your optimal to the end of your fib is called your drawdown range, right? That's your drawdown. So if you enter here and this candle came and triggered it, right? And price, instead of pushing down, if price started to push up, then you're in negative, right? Your gains are negative, right? So this area from the start, from this optimal entry to the end of the fib here, that is your drawdown zone. Okay, that's your drawdown zone. So now you have to find a way to manage risk in that drawdown zone. Because if you risk 2% on this trade, if price pushes up and goes past 3431.71, you're going to lose your 2%. How do you lose less? Right? You've got to find a way to lose less. Now, there are many ways to do that, right? One way that I follow is, let's say, for example, if a 15-minute bull candle closes, I'll just give you two examples, right? If a 15-minute bull candle closes inside this drawdown zone, this is a drawdown zone. If a 15-minute bull candle closes inside this, so this, for example, if a bull candle closes, it doesn't have to close inside this, but if a bull candle closes and the wick is inside it, right, then it's very likely that the next candle could go and break the high and continue higher, right? Which means you're going to be in a lot of drawdown, right? You're going to very likely lose that 2%, right? So if let's say bull candle closes, the close is above 28.93 or even below, but the wick, the bull candle wick, is above 28.93, right? So the bull candle is here, okay? The wick is above. If that happens, then you close 25% of your position, 30% of your position. You close something because it's very likely that the next candle, because the bull candle has closed, the next candle could push back up, break the high, and continue higher. There is a possibility that can happen, a higher possibility. So then what you do is, soon as that bull candle closes, you close 25% of your position, right? And then if the next candle, as anticipated, if the next candle starts to break the previous bull candle high, close another 50%, 30%. That's how you manage risk. That's one way. Those are two examples and one method of managing risk. So that by the time price gets to your stop loss, you've closed possibly 60% of your position, and you'll no longer lose your full 2%. Now you lose probably 1%, 1.2%, 1.3%. So you've saved a percentage of your risk, right? And then just check to see if there's another setup for the day. If there is a setup, you take that setup. If there isn't, call it a day and come back in the next session, right? There are many ways like that to manage risk, right? You can do it by percentage. If price moves, for example, 50% of the way into your drawdown zone, however you are trading, I don't know, if you're trading this fib model, then this is your drawdown zone. If you're trading any other system, there will be an area between your entry and your stop loss. That area is your drawdown area or your drawdown zone, right? So in that area, you got to find a way to manage risk. You can use support or resistance. On the streams, what I do is I use M15 support resistance levels. That's why you'll see on the streams where I place a red line. I place a red line, right? And it's always a round number. I'll place, let's say, for example, here, right? So 3429, right? Let's say, just for example, 3429. Okay, 3429. That's a resistance level. So I'll place 3429. And then I say on the stream, if price breaks that high, 3429, close 30%, 40%, 50%. If it breaks the high, if price pushes past 3429. If a 15-minute candle closes above 3429, then close everything, because it's very likely then your stop loss is going to hit the next candle, is going to, because it's a bull candle that will close above 3429. That means the next candle is very likely to break the previous candle high and continue high, right? So there are many ways to manage risk when you're trading. Many ways, right? You can do it by percentage. You can say, okay, if price comes 20% or 25% or 50% into my drawdown zone, into this zone right here, if it comes 50% of the way, I'm going to close 50% of my position. Or I'm going to close 30% of my position. But you got to pick one and follow that in all your trades, right? And that will be your risk management, your risk management method, right? And that's it. And on some days you'll have winning days, on some days you have losing days. But on the days you have losing days, if you manage risk, you'll lose less. Okay, so yeah, price is pushing up. 4-hour candle is very likely to close bullish. Let's get rid of this. 40 minutes for the 41 minutes for the 4-hour candle to close. Very likely to close bullish. So this is very likely to be a zone, all right, like a 180 pip zone, 185 pip zone, and this will be your liquidity candle. This one right here, 160 pip candle, right? That'll be your liquidity candle in that zone. So then what you need to do is then wait for the pullback if there is a trade, right? You got to have a setup in mind. So if you're looking for a buy, then wait for the pullback, wait for support to form. You can either wait for, let's see, it depends on how far price is from the EMAs. Yeah, we are over 200 pips. So you can wait for 15 minutes support to form, right? If price is above, over 200 pips above the EMAs at the point where it's turning, then you can wait for 15 minutes support to form and take the trade from the liquidity candle. So there'll be a liquidity candle here. Now you got to wait for the 4-hour candle to close, right? I keep saying this. You got to wait for the 4-hour candle to close first, and then wait for, if it closes bullish, just like this. If it closes like this, then wait for price to pull back, come to this liquidity candle, maybe wait for 15 minutes support to form, and take a trade. Or you can also wait for 30 minutes support to form, right? It depends. There is no right or wrong answer here, because sometimes when price is this far away from the EMA, 15 minutes support is enough. Sometimes it's not enough. If price comes here, continues to range again, then it's better to wait for 30 minutes support support. Now you will not know that in advance, so you probably have to. I would recommend on a Friday, being a Friday, uh, being a low volume week, I would recommend waiting for 30 minutes support, right? That's what I would do. If price comes back here if you close bullish, if the 4-hour candle closes bullish and price pulls back into this liquidity candle, I would wait for 30 minutes support to form and then look for a trade to go back up. That's what I would do, because for those two reasons, we've had a low volume week, and price is coming back into a range, and also it's a Friday. So 3 reasons, right? We're coming back into this ugly range where price spent almost 10 hours in this range, right? We're coming back into that range. It's a Friday, and we've had a low volume week. So for those 3 reasons alone, I would wait. If price pulls back, I'd wait for 30 minutes support to form and then look for a buy to go up. Okay? You're most welcome. You are most welcome. I will continue to share, ideas here. On next, yeah, next week, I'll share some setups with you guys. I'll share some setups. There are 4 types of trades that I look for, right? There are 4 types of trades. Whichever session I'm trading, there are 4 types of um, 4 types of setups that I look for, right? I'll explain each of these. It'll take a long time, so I'll explain maybe one setup or 2 setups every day, and we'll cover it in about 2 days. Yeah, that's better. We'll cover it in 2 days, starting Monday. You can take a screenshot of it if you want. That's the first setup, second, third, fourth, and this is the same thing, but this is, I've explained it here, right? And these are the entry rules. Okay, these are the entry rules. You can take a screenshot of these, and we'll talk about this on Monday. If I forget, remind me. We'll talk about it, but I'll try to remember. We'll discuss. We'll split this into two, and we'll do probably two of these setups on Monday, two on Tuesday. Monday is anyway it should be a low volume day, so we'll discuss. We'll spend about 20-30 minutes just discussing these, right? So types of setups, 4 setups, and that's the explanation of those 4 setups, of those same 4 setups, and those are the entry rules, right? And we'll talk about this on Monday and Tuesday. All right. So yeah, 30-minute resistance is not forming. We're still very bullish. So just wait for the 4-hour candle to close. There are no sells here. Yeah, sure. You're most welcome. You're most welcome. We'll do it on Monday. So yeah, the 4-hour candle is closing bullish. 30-minute resistance doesn't seem to be forming yet. This candle has 6 minutes to close. I doubt price is going to push down 50, 60 pips in 6 minutes. I think we're closing bullish. We're closing above this, which means the 4-hour candle is very likely to close bullish, push past this, wait for the pullback. Wait for the pullback. Don't chase price because we are in inside supply, and we are in a high liquidity candle, and also we have a high liquidity level here, and we have a high liquidity candle here as well. All right. Okay. Don't overtrade. Don't over risk. Have a great weekend. I'll be back 7:30 a.m. EST on Monday, and we'll draw our zones and see if we have volume. Right. I'm considering shifting my trading and the streams to a different session, honestly, because the last 5 weeks NY session has been hasn't been great to trade. There's no clean volume. We've, even if there is volume, there have been no setups, no pullbacks. Like for example, if this happened here, there was no pullback, right? If you just move this entire structure to the left 30 minutes or 60 minutes to the left, there was no pullback to take this trade to push up. Price moved 250 pips, but there is no pullback to take that trade unless you're a breakout trade and take. I don't take breakouts. I always wait for a pullback. So there was no pullback. So it's either been that there is volume and no pullbacks, or there is no volume at all and price has just been ranging, right? This is what's been happening in the NY session, right? Either there is volume and no pullbacks. We saw that on CPI as well. There was volume, no pullback, and just price just whipsawed and then just ranged. This was CPI this week. That was CPI. Look at that. Pushed up, came back down, ranged. Nothing. So if you're a breakout trader, yeah, you could have just placed buy stops or sell stops and just wait for price to trigger and push up. But that's very risky. I don't do that. That's more gambling than trading. That is, there is that if you're trading if you're taking buy stops and sell stops just above a candle high and a candle low, that doesn't require technical analysis. That is just gambling. You're just you're rolling the dice and seeing which of the two trades will work. That's not technical analysis. What I try to do here is I try to follow a logical or a rule-based system, a scientific system of finding liquidity and then waiting for candle confirmation to take a trade. That's how my system is built. It's based on liquidity and then candle confirmation. So take a trade, right? That's as straightforward as it is. Yeah, we're pushing up. We're pushing up to the Asian high. We should continue high. All right. All right. See you guys on Monday, 7:30 a.m. EST. Take care. Have a great weekend.